The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Joining us now for our market analysis here on today's program, we welcome in John Heinberg with Total Farm Marketing. And John, good to have you on the program. Hope you are doing well and had a good weekend.
Yeah, solid weekend. A little chilly up here in Wisconsin today, that's for sure. So, but it is October, and maybe we've been a little blessed up to this point, and maybe things are a little more normal instead of chilly is the word I probably should say. But still, at least beautiful sunny day today, and guys are getting out there getting some work done, and we've got some decent weather this week.
I was gonna say I busted out my flannels over the weekend. That's for sure. Soup and flannel season is here for most of us, but to your point, a lot of work getting done across the country here continuing. Some of that, I think, contributed to corn and beans being slightly lower Monday, a little seasonal harvest pressure. Let's start there. Did you see anything else that really stood out to you in the grain trade on Monday for corn and beans at least?
Obviously, again, on the overnight, we had that nice move higher in the markets based off of what was going on in the Middle East between Israel and Hamas and the horrible events that are going on there. Again, a lot of times though, when we see those types of pops in the overnight led by that crude oil market, which still holding strong gains here at the end of the day, we see those things kind of reverse out. And sure enough, it happened again today with the 4 or 5 cents higher or 4 cents higher we were in corn turned into 3 cents lower, and positive gains in beans also turned into negative gains in beans. So we'll have to see. We obviously with Columbus Day, we're missing some news today. We didn't have export inspections. There wasn't any possibility of export sale announcements on the overnight today, and then obviously we won't see the crop progress numbers. So that pretty much left us with one thing today, which is hedge pressure from harvest. And weather looks really good this week. We're going to see things probably move along pretty nicely until about the end of the week. We got a fairly good weather system maybe coming through the northern half of the Corn Belt. And I think that hedge pressure is something we're going to see here as we're getting grain bushels moving into the pipeline for both corn and beans.
Well, and to your point there with a little fresh news and just some hedge pressure to kind of drive the markets on Monday, you mentioned the attacks from Hamas on Israel over the weekend. And, in times like that, we tend to see some of that money flow from the big hedge funds go into quote unquote safe havens. And I think we got a lot of that on Monday with a case of wheat, crude oil, and gold, John.
Yeah, very much so. And, you go look at some of those markets, probably more of the crude oil just because of the concerns regarding that region of the world. Obviously, gold was heavily, heavily oversold. So it was a, flight to safety as well as value there at the same time. The other thing that maybe came into play this afternoon, last night it looked like we saw money leaving the equity market going to the commodity market. During the course of the day today, last week on Friday, the stock market had a heck of a turn back higher, followed through off the weakness from last night to a nice, right now we're trading solidly higher again today. Maybe that's that window too. We're seeing some money move back as the day went on today. Take a little risk off on the commodity side and put that money into the equity market, especially given how far that market's been sold off here over the last couple of months. So, a lot of moving pieces, again, as always, just again, really lacking some news, lacking clarity. The market's not sure where things want to go. And, I guess at least in the commodity space, it just comes back to the path of least resistance, which is fresh supplies in the pipeline and pressure from producers as they're selling the grain into the marketplace.
As you take a look at a corn chart specifically, I know $5 D's corn, that nice big round number, feels like that's probably going to be an overhead resistance point for us here in the short term, John. I know 488 and a quarter at the close on Monday, so got about 12 cents to get there. It just feels like that nice round number is going to be kind of a sticking point for us for a little while.
Yeah, it's going to be a difficult number just from the psychological standpoint. The 50 numbers, the zero numbers, 75, 25, those types of cent breakdowns. Those just make it hard because just the psychological factor that, hey, now we have a 5 in front of this corn market versus a 4.99, that type of thing. So we made a good run at it last week. Obviously failed as we got closer. I think that's going to be a really key barrier. I would assume there's a lot of sell orders sitting there for, hey, we get back to $5. I'm moving this stuff a little bit mentality. It might take a little bit of something to get us through there. And that's probably going to be some news of some form, whether, Mexico or somebody steps in and picks up a nice slug of corn again, or we get the USD, we get the report on Thursday. Maybe it comes in a little lighter than we expect things to be. We'll see. There's a lot of questions and variables coming forward here. But again, right now it's just going to be a little bit difficult. Believe it or not, though, we've had a nice rally, as slow as it has been. The funds are still holding a big short position in corn. They did pare it back slightly last week, but not much, given the rally that we've had. So it's just that time of year again. We just need some news to really feed the bull. And today we're kind of missing it because of the holiday.
Well, and I think we've been missing some of that bull feeding news here for a little while. And you look ahead to Thursday with the WASDE report. I know some chatter that potentially with a better look at what's in the fields, planted acres, yield could get adjusted maybe downward. USDA could slash some corn or bean export targets on the balance sheet. I mean, there's a few things I'm hearing chatter-wise surrounding this report coming up on Thursday. What's your take? What are you watching for the most on Thursday's report?
Obviously, I think it's going to be what happens on the demand side of things. And, some of the reason we've found some footing here and possibly put a fall low in at that 467 level, it's been just a little uptick in demand news. I mean, it's not enough to move the balance sheets, but, strong ethanol margins. We're seeing some good buying from that side of the coin, as well as, Mexico stepping in buying some corn. Export sales fairly solid last week, even though most of that was well known. It's not great demand news, but it's just better than it was. And that's enough to maybe make some money, move this thing up a little bit. And I think that's what we're seeing. We'd still have some concerns out there too, just with the river and what's, transportation and how things are moving. Those probably still more bean stories and corn stories at this window, but all those things just kind of weigh. As we get ready for the report here on Thursday, I guess the biggest thing to me, like I said, what do they do with the demand? I'm kind of expecting maybe a kick the can down the road report. We'll take a little bit off of yield. We'll take a little bit off demand and add in the grain stocks report, which was a little bit less than anticipated, and carry out comes down a little bit again, but it might still be obviously heavy in that regard. But the trend is going to be that'll be our third consecutive month where we've seen the carry out come a little bit smaller, even though it's still a 2 billion bushel number, it's still coming down. And sometimes that sentiment alone can be enough to keep the market supported that, if this trend continues, the market's going to eventually get a little bit tighter on supply.
With the case of crude oil, seeing some of that money flow in there on Monday amid the Middle East issues, crude's come down quite a bit here in the last few weeks. Do we anticipate a sharp rally back to where we were just a few weeks ago? I mean, or do you think this could be just a short-lived move here on the news to start off the week, John?
No, given the aggressiveness of last week's sell-off, this might be a move back to where things need to be in terms of, a sustainable price given the supply-demand factors. Maybe throw a little war premium in. The tech sellers just hammered this thing last week. That was a market that was, well overbought. Everybody's talking $100 crude, $150 crude, talking like that nature. The public sector poured into that market. And then all of a sudden, boom, we get that lousy gasoline number in terms of gasoline demand. Throws the demand fears into the market. And typically when you get a market that's dealing with a short supply, mentality, and that's what the market was trading on, then you throw the other side of it in there, you see things fall apart quickly. And obviously that's the sell-off that we saw as, people were basically running for the hills in an aggressively selling market. So we took it too far. And then realistically with the news last night, probably quickly turned this thing back around to a point of equilibrium. Today we've rallied, still got about $3 of value put into the market today from where we closed on Friday. We've been sitting here all day. So again, maybe that's where it needs to be trading versus, the few dollars lower. I think next couple of days will be very, very key. We'll just have to see how much things escalate. What do you hear from the news front? Is there going to be anything restricting movement in and out of that region? Those things all come into play.
We're having a conversation today with John Heinberg from Total Farm Marketing. John, let's move over to livestock. Plenty of red on the screen in cattle and hogs on Monday. I guess I'll start with the cattle trade first. I mean, what was going on there? Did I miss something, or was it a technical type move? What was happening in cattle on Monday?
We're in the middle of a technical correction right now, and it still has some room to go. Again, I'm not liking the price action today, $1.30 lower. We did see cash a little bit softer last week, but retail values are holding in there, 303 on the carcasses at midday. So we'll see what the close does. Close comes in this afternoon on that retail demand. But you just go look at the charts here. We're still in a chance. We can move this thing down to about the 182 December contract level, 182.5. There's a pretty good floor of support right there, and we're still in a very nice long-term uptrend. There's even room this market could break back even further, take another $10 or so off of it, and still go back to the multi-channel or multi-year channel that we're trading. This uptrend in cattle, if you go look at the long-term charts, goes all the way back to early 2020. Basically, we've been working a channel higher, and we've been at the top of the channel for quite a while. Now maybe we're rotating it to the bottom side. The thing is, like I said, we could take this thing down into the mid 170s and still be in a very solid uptrend. Now, the supply side, the fundamentals probably don't dictate that. So I'm kind of watching this midterm support area, which is around 182.5 December. That's an area that we saw a lot of support over the last handful of months. And probably can hold this market in here again, especially as long as the fundamentals kind of stay where they are, unless we see a real break in the retail side of it. Obviously, I think feeders could be the mover in the marketplace. If we see corn break back lower, feeders kick it back in. The last rally we had in live cattle was feeder led in terms of its move. That's still going to be the market that'll probably have the first reaction, will be the money flow into the feeder market. But again, right now, though, it's just a bit of a technical sell-off.
How about the hog trade? Was it some of the same things there on Monday, or is there something different going on in hogs, John?
Well, this was a little bit of price consolidation, and all this was today. I mean, it was still $1 lower in the December contract, but we had that really big export sale number, 47,000 metric tons last week on Thursday's export sales report. That gave us that quick recovery off those lows. In the last 2 days now, we've been trading at the top of that range. Today was an inside day within the Friday's consolidation trade, but narrowing the gap up or the spread between, the highs and the lows on the day. So we'll have to just kind of watch if we can continue to see some movement higher in terms of some of the demand news, and maybe we can get this market to move a little bit higher. But a little bit concerned about the hog market. Supplies are a little heavier than we thought they were. We saw that in the last quarterly hogs and pigs. Now it comes down to the demand. Do we get another week like that on export numbers to see this product move? So that's going to be a big key. But at least today, we're holding on to that recovery rally we saw on Thursday last week after that strong export number.
John, before we wrap it up and let you go today, any final thoughts you'd want to share with us or reiterate to folks here today?
The biggest things I'm talking about with people right now is make sure you have a plan for your bushels here after harvest, whether you're going to store it, you're going to ship it. You want to stay in this game a little bit because, you just don't know what's going on in the geopolitical side. I would say corn prices and bean prices are kind of in the middle of where they could get to if things get, a little bit more aggressive bullishly. We could see both prices rally. If things stay heavy on the because of lack of demand and good production, we got room for prices to fall. Biggest thing though with producers this year, make sure you're calculating. Don't forget about that interest charge. That's going to be part of things now. If you're going to put things in the bin, you're going to pay for storage. Make sure you're protecting the floor out there, because my biggest fear for a lot of guys this year, we're going to take the risk of storage on, don't protect the floor, and we do break to the downside. And now you're sitting there with an asset that's declining in value and taking on those extra risks this year.
John, if folks want to reach out to you for some advice, I'm sure Total Farm Marketing is a great way to get started. TotalFarmMarketing.com, or giving you a phone call, isn't it?
Sure. Love chat with them anytime. Phone number is 800-334-9779. Shoot me an email at johnh@TotalFarmMarketing.com. And like you just mentioned, our website, totalfarmmarketing.com.
John Heinberg with Total Farm Marketing. Thanks for joining me today here on Market Talk. Have a great one. We'll talk to you next week.
Sounds good. Have a great week.